Good morning, everyone. This is Charles Sniper again with a weekend review of the market and update. So this is going to be for the next week, which is December 6th to December 10th. So I'll be reviewing the markets at a very high level to help you navigate what's about to come in the next 1 week. Let's get started with SPY, how it is doing. So what we are looking at here is a weekly chart on the left side and a daily chart on the right side. Okay. So on Thursday, we were very happy about what happened on Thursday. So the moving averages were kind of lined up to form a support at 50 days average. So the line that you're seeing here is a 50 days average, and let me give it a bold color for highlighting. So on Wednesday, we closed below that. On Thursday, we kind of rallied back and closed above that. And there was some give up happening on Friday. We went all the way, made a new low, and then started pulling back. And the good thing is we closed above 50 days average. Okay, so that's the only advantage of whatever the move that happened in SPY on Friday. Is it out of the bearishness? Is the first question a lot of people ask, right? So it tried to, the good thing is it tried to claim the 5 average, which is gray in color, and 8 average, which is yellow in color. It tried at least, okay? And then it failed completely towards the end. So what it says that it is not ready to turn bullish yet. Okay, the volume that happened is a little bit more than the green volume that happened on the first day. So we really have to be very patient with this one and see how things turn out next week. Okay. So does anyone know now? If you ask me, does anyone know if it will bounce back from here or go further down? If you ask me, no one knows it. Remember, whatever the market does is a crowd behavior where a lot of buyers and sellers try to kind of defend this level. So there will be a lot of big players who will be trying to defend this 50 days average and they want to see higher. And there'll be a lot of big players who want the market to go lower. So it's a continuous fight between those two big players to kind of see how exactly it behaves. If there are enough buyers to close it above 50 days constantly, persistently, then the bears who are trying to push it down will give up sometime or the other. Okay, so it's a continuous test, and if there was only one big player, I would say then it's up to them what exactly he wants to do with the market, right? But there are no there's no such thing. There are thousands of big players who can turn the markets around. Okay, so with that in the context, I want everyone to understand that no one really knows how the market will kind of move from here, either to the upside or to the downside. Okay, so let's focus on what could happen from here. So we have a 5 days average and 8 days average. The market is below that, and we have a middle Bollinger Band that is pointing downward. When it comes to below, there is a gap fill at 447, there is a gap fill at 442, and there is a very big gap fill at 436 level. And we have 100 days average at 448, and we have 200 days average at 429. Now, in the best interest of the current situation, let's go and add one more moving average called simple moving average 150, which is exactly between 100 and 200. So when we go and add that guy there and give it some color and make it something bold, it's somewhere hidden, and then it is just above that gap or above the cloud. So let's talk about the bullish case, how we can target the how we can identify that it is a little bit turning bullish. Okay, so the first step that that it has to do is it has to regain above the 50 days average. Okay, sorry, the 5 period average, which is the gray line that you are coming up. And is it okay for it to close above it just one day? No, you have to wait at least a couple of days for it to claim that 5 period average and close above it. That's when the bears will give up, okay, to the pressure that bulls are applying. Until then happens, you have to be careful. Now let's talk about the bearish case. What exactly is going to happen? There can be a scenario where this bull and bear fight might continue. So you can see that a lot of bounces will be happening there, and a lot of pullbacks will be happening there, and it can be in this range, I would say, for some more time. Okay, so the market can move up or down in this range, and as long as it is doing that, that's not that's constructive in one way, but it's not that constructive because it is forming a bear flag. So the longer it stays below these averages, the more it is prone for giving up to the downside. Okay, so you have to wait and see how the situation is turning around. And whenever these kind of moves happen, you'll see the whipsaw moves. What are whipsaw moves that talking about? Say, for example, let me get this one. So this is a SPY chart again. What we are looking at is the percentage up and percentage down value changes. So when we go and look at it recently, as you could see, there was a big down about 2.25% on this gap down day, and the next day it is very big upside move above 1.2%. Two down days move and one big up move. Okay, and the next down move is their percentage wise. So luckily that Friday thing is not as intense as Thursday bounce. So I think we could be a little bit um, happy about how the things are changing, but we have to be open to the mind that this kind of volatility can increase, and there can be a 1% drop or 2% drop or even 3% drop possible next week. Okay, so the initial signs of it is the market not able to claim the 5 period average and move higher. So that will be saying that market is staying lower and it has intentions to go further low. So when we compare it with some kind of moves that happen typically all this year, in the last 1 year, it has not been that extreme. But the kind of dips that we saw early last week is concerning there. But when we go and compare this one to what was happening in the COVID times, right? So you see whatever bars that were there here, and you see whatever bars that were here, right? So if you go and look at it, so these are like 3% moves, very common down days, and then bounce back, and there is a 10% move also. Okay, so these are kind of very very big bars that could happen, right? No one can uh, remove the possibility of them happening. And so we just saw 2% down moves, 1% down moves, but certainly there is a possibility of 3% down move. So when you take that possibility into account, then you get into a caution mode. Okay, and I would want you to be in a caution mode, and I want to be open to the possibility of such drawdown days. What it does for you, it does a couple of things for you. So you do not go and aggressively buy this dip and exhaust all your account by with stocks. Okay, because there is a possibility that it might go to 150 days average, and there is a possibility that it might even touch the 200 days average. Okay, so whatever that happens, whenever that happens, in the long term of market perspective, that's very constructive because the more it pulls back, the more it springs to the upside. Okay, this pullback will be very very essential for continuous market moving upside. But a lot of people might lose the entire account, their entire profits that they made as part of this if they are not cautious. So that's why I'm spending so much time to requesting all you guys to be open to the idea of a further pullback. it's not no one is sure whether it will happen or not, but the longer it stays around this 50 days average and kind of staying around that and fails to claim back that 5 days and 8 days average, the more chances of it for it going lower. So with that in perspective, we have the cloud support here with the potential gap fill at 445. And when you go and look at the same chart on weekly, what is happening here is we are being supported by the weekly 20 period average, which is very common average that a lot of people use. And as long as we stay within that, above that, it should be a constructive thing. So what kind of moves that that you could see that you can move, you can see a move that's happening like this candle, where it's trying to, let me give it a different color. And so we can see that move, which is like above 20 period average, but below 5 and 8 average. And we can see another move like that going forward. So you can keep on seeing that, it stays lower, and then that is a sign of more bearishness about to come. Okay, but if you want to see bullishness, it has to regain at least half of this last week's candle quickly and start moving higher. So that's pretty much about SPY. It's time to be cautious. It's time to be kind of using any bounce opportunities to trim your positions, than add on a lot of risk. Once it kind of shows some signs of constructiveness, you will have plenty of opportunities to ride higher along the cloud or ride higher. So you can still make money, but how much risk you are going to take in making that money is the question. And I want you to be patient here. So how QQQ is looking? QQQ also is looking similarly. So on Thursday, or for example on Wednesday, it was very, very far away from 50 days average, whereas SPY already touched its 50 days average at the time. So it did that final push down and touched the 50 days average and bounced back. On weekly also, it now is in sync with the overall market, which is SPY, with 50 days supported, 20 period average being supported there. Okay. So other perspective of looking at things is, look at the entire up move that happened from here to here. Let me go back and hide the studies. So what we are looking at is, if you take this entire up move that happened in QQQ, it pulled back 50% of that move and is trying to stay above that September high. So a percentage, when you take these percentages into consideration, it doesn't matter whether it's a high momentum stock or a low momentum stock. Whatever move that was done, 50% of it was undone. Same thing with SPY. Whatever move that we had, 50% of it is undone. Okay, so it's very, very common, and as long as it is staying above this, close above this September high, which means we are going to have a little bit red November, but October, a good October, a little bit red November, but we would like to see December going and staying above the September high, like last quarter. Okay, so in that context, it's time to be cautious. And QQQ also is in the same bucket with a similar kind of percentage retracements. And even though it sounds constructive, but as the market starts moving down, all the indices kind of follow it. Even though some stocks are there with a very good strength, relative strength, when they do not see the market bouncing, those relatively strong stocks also might start following the market and give up. Okay, and when they do that, those stocks also will give up a lot of percentage, like Microsoft, which is holding pretty good out there. It might also start giving up. As you could see, there is this kind of head and shoulders formation, and it looks like it realized, and there is a gap fill here. And when we go and look at Apple, which is kind of a different beast altogether, these are some kind of stocks which might give up if the market persistently uh, doesn't bounce back and it wants to go lower. Okay, so some other stocks like NVDA. It's also showing signs of that reversal. There is yeah, all these stocks will give up something if the market will not bounce. Okay, see how far it is away from the weekly 20 period average, how far it is on a daily. So most of the stocks from percentage wise at least will try to kind of catch up with what market is doing. If market touched its 50 days average, this also might have a potential to move to that 50 days average. Okay, please don't get caught in those kind of hard pullbacks for no reason, right? So just be cautious. So with that outlook, I think we have, it's been 50 minutes. Let's quickly look at how the small cap is doing. The small cap, as you could see here, the IWM, it has been in a, almost for the entire year, it has been in a range, and it did that fake breakout from that range. Typically, the price target of that range breakout will be twice this channel high. It probably went to 1/4 of it or even 1/3 of it and started giving back. Now it's not only back into that range, but it's kind of testing the lows of that one. So which is kind of, excuse me, a little bit worrisome, right? The volume that you see on the weekly is very, very high. The only positiveness here is the cloud is very thick and it forming as a support. So we might see some consolidation happening there. Okay. So from QQQ perspective, text QQQ perspective, it's kind of a weak sell volume. So which kind of shows signs that QQQ was trying to hesitate to move downward, but now it's also joining the party. So which might get concerning. So one big week like this and then another follow-up big week like this will reset everything. Okay. So stay cautious and wait until things improve. Let's look at VIX, how it is doing in the volatility perspective. So from VIX perspective, what we are looking at here is it has made that high. So let me expand this guy. Hide all that studies for simplicity. So what we are looking at is it has been low for quite some time, and as you could see, it was following and respecting this kind of down move, but suddenly it was in that 15 dollars range, which was kind of low volatility. Market continues the slow grind higher, but we are seeing this sudden spike about 20, which is very concerning. Okay, so now instead of forming a lower high all the time, it's starting establishing these kind of higher highs, so which is not that constructive. So which means after all the pre post-COVID move and all these stimulus being added where the volatility starts falling. Now it's trying to pick back up, and these trend lines it tries to kind of support whenever it bounces, tries to bounce the next time. So what you would like to see is at least it comes below the 25 range and stay below that. So that will be very constructive for the market. So we see that there is a gap of 20 here, and we would want it to come back below 20 for a continued slow grind higher of the VIX into the slow grind higher for the market. So it has to be below 20s. The more it is elevated at these levels, the more there is a potential for it to kind of cause a further elevation. Okay. So I hope it gives up back like this and things get back to normal below 20, but yeah, it's just a hope as of now. SKEW, it's kind of still high, and we can see that there is a lot of concern out there. Above 145 is a very extremely overbought territory, and then it's still better to be cautious here. We would want it to see at least come back to 145 and 135 range, or even below that for a continued slow grind higher in the market, but it's still in a concerning mode. So while that concludes the quick market review, we looked at small cap, tech companies, QQQ, and the overall market itself. And let's quickly look at Ethereum and Bitcoin. So how they're doing. So what is happening here? Let's me go and okay. So it looks like it kind of had a very bad pullback on Friday on over the weekend, and let's go and see how our support looks like. That's not a good thing. So this is how the market also could be playing around with 50 days average, right? So market kind of, you saw some volatility there. It tries to stay above 50, but then it finally gave up, right? And then it tries to kind of stay above 50 for some time, and it finally gave up. It tested and resistance there, and it's trying to go and reach to that bottom. So this is the kind of behavior. It tries to stay above the cloud, and finally it gave up. So this probably Bitcoin is showing how the market might look like in future. It's a kind of a yeah, it might show exactly what's going to happen in the market also. But with that context, let's go and see how it looks on weekly. So on weekly, Bitcoin pulled back, or whatever the range here, this entire range, it pulled back to the 61%, 61.8% level. From that context perspective, which is very constructive. So it's common to make this kind of cup, and then this is trying to form a handle. 61.8 retracement is typically very major support, and that aligns with weekly 20 period average also. So what I would like to see here is form this nice handle and then break out to higher. And I want this to kind of form at least this cloud as a support, go inside the cloud and make it look like a noise. So from Ethereum perspective, that's a decent bounce. Ethereum is trying to stay above 50, contrary to Bitcoin, which kind of gave up and went below 50, right? So Ethereum is strong. If you have to kind of pick your play in coin, probably I will lean more towards Ethereum sides because of its relative strength to the Bitcoin. So what we are looking at is on a weekly, it is it did not even pull back all the way to 20 weeks average, but it's trying to stay above 8 and very close to the 5 weeks average, which is very good. Uh, Overall, the cup kind of is a little bit twisted to the more bullishness, and that shows some strength also. But this is kind of a handle formation there. It's good that it is respecting that 50 weeks average, 50 days average, almost to the penny. I have some buy orders here at what was this? Yeah, I had some buy orders here. This Ethereum might not represent the actual move that's happening, but I think I was able to buy at 3090, something like that. So I had some orders in place, like staged entry orders, and two of those orders in 3800 and 3900 got triggered yesterday. So yeah, that was a good dip buying opportunity, I would say. Um, Above 50, as long as it stays above it, it's constructive. So let's hope that it continues that way. So with that, that concludes this overall market analysis and crypto analysis for the next week. So be cautious, show a little bit patience, let it prove itself. So what you would like to see is, it kind of probably take its own time to stay below this, like this 1 2 3 weeks, and then finally make that move above these 5 and 8 averages. So that gives you needs another 1 month of rally. Okay, so I'm expecting similar kind of year-end rally if these levels hold. This is first week, second week, and probably there will be a third week of sell-off, and then we would see this kind of bounce happening. Okay, so be a little bit careful. Thank you very much for tuning in, and be cautious and stay green. You probably will get better levels to enter the stocks and the market. Okay, thank you.